Hey guys, welcome. This is the Debt Management Series Basic, and this is going to be 4.1 History of Credit, and this is going to be about the banking function. So there's going to be a lot of takeaways that you guys are going to get from this particular tutorial, but the two that I want you guys to take away, the biggest takeaways, I should say, are the double coincidence of wants. We're going to get into what that is, and I apologize for that, guys. And the second one is going to be the banking function. So this is ultimately why banks exist. But before we begin, disclaimer: the financial information contained in this video is for informational purposes only and not for the purpose of providing specific financial advice. You should contact a financial advisor to obtain specific financial advice. Okay, guys, so we already went over the debt management overview. We're now going to go into the history of credit. So this is going to be about the history leading up to the modern day credit system that we currently have. So what you guys have to understand about credit is the history of credit actually hinges on three things. It hinges on human beings, the monetary system, and ultimately banks. So when I was looking up how to explain the history of credit, what I kept running into was that it was kind of an imperfect thing if I would just explain credit just as is. So what I decided to do was decided to do a little investigation on these three areas, and that's what this video is going to do. And this is going to bring us all the way up to how credit currently works. So let's start off with the history of human beings. And this is going to be from the Stone Ages all the way up to the Bronze Age. So there's going to be four areas of human development that I'm going to focus on. And the first is going to be the prehistoric periods, so the Stone Age. And basically I'm going to break it up into the three eras within the Stone Age. So one is the Paleolithic era, which is the Old Stone Age, the Mesolithic era, which is the Middle Stone Age, and the Neolithic era, which is the New Stone Age. And then we're going to end it up on the Bronze Age. So let's start with the Paleolithic era. So just so you guys know, the first part of Paleolithic, paleo, it translates to old, and lithic translates to stone. So if you guys get it, Paleolithic, Old Stone Age, and that's the same thing with Mesolithic and Neolithic. But the main takeaways that I want you guys to get from the Paleolithic era is this is where human beings first started, and I have approximately 2.5 million BC. Now, if you guys saw the last slide said it was 3 million. The main reason is because we can't find definitive proof on exactly when human beings started. So the only thing that we have is a 0.5 million year range where we could say that human beings started at. Now, the next thing that I wanted to talk to you guys about was approximately 1 million BC. That's when human beings learned how to use fire. And that's going to be one of the biggest things that change human beings. Now, around this particular time in human development, they were nomadic. So nomadic is when a group of individuals travel to wherever their food sources is. So to give you guys context, let's say that your food source would be something like the ducks. So essentially, the ducks fly south in the winter. So what would happen is your habits would have been, if they're in the north, that's where you go. And then when they fly south for the winter, that's where you go as well. So you're always trailing wherever your food source is. The next thing is one of the main ways that human beings got food was they would live off the remains of the prey of a larger predator. So a larger predator would kill an animal and then take as much of the meat as that predator wants, and then whatever was left over, that would be for the human beings, and that's essentially how we would eat. Moving on to the Mesolithic era or Middle Stone Age. This is approximately 150,000 BC. Now, at this particular point, this is actually where the Stone Age gets its name from. Now, during this time period, human beings develop hunting tools, and these hunting tools were made of stone. Ironically, well, I don't know if it's ironic, that's exactly why it's called the Stone Age, because that's the kind of tools that were used. Now, at this particular point in time, now that human beings had tools to kill prey, they no longer had to live off of the remains for larger predators. They can actually go kill the prey themselves, and this actually caused a transition between nomadic and hunter-gatherers. So hunter-gatherers more or less would kind of be the old school tribes that you would see. So if you saw tribal people that live even today, that would be the main reason why they were able to do that. It's because they actually had tools, so now they can actually hunt. So in the Mesolithic era, the most important takeaway is the fact that we now have hunting tools, and now we can actually be hunter-gatherers versus just following whatever food sources are. Now moving on to the Neolithic era. So this is going to be the new Stone Age. So this happened approximately 10,000 BC, and this is where agriculture starts. And essentially what happened is there was now a transition from the hunter-gatherer to the prototypical farmer. So what we consider farming nowadays, it was actually a bit more sophisticated than what farmers did back 10,000 years ago. But essentially the base function is exactly the same. So what ultimately ended the Neolithic era was the beginning of writing. So once human beings were able to create a message and decipher the message, that actually ended the Stone Age and all the prehistoric ages. And this brings us to the Bronze Age. So now for the Bronze Age, this is where I'm going to leave the development of human beings. The main reason is because if you guys understand where, like, how I'm gonna attack it, you really don't need to go past the Bronze Age. The Bronze Age essentially is where we start seeing exchanges, and now there is a change in the kind of tools we use. Now, instead of using tools of stone, we now use tools that have heads of metal. So the main difference here is with metal, it's a lot more efficient, and you can actually mold the metal into whatever shape that you needed. And that's actually what allowed civilization to expand. Now, one of the major changes here is the fact that now there is an exchange. So the earliest form of exchange is the barter system. So with that, we're actually going to take a transition into the monetary system, bartering to credit. So now, just as a recap for you guys to understand why there was a need for a monetary policy, the first, we have nomadic groups. So these people would go around, find their food sources, and essentially everyone in that particular community would work together for the same resources. Now, in hunter-gatherers, there was a little bit of a difference. You now had people who someone would hunt for meat, and the others would gather fruits and and berries and nuts and pretty much things like that. And everyone had a contribution to the society. So that brings us now to the farmer. So the farmer, now you can even be in even smaller communities, and this could actually be just a family unit, and produce the kind of grains, and those grains could then be exchanged for fruits and nuts and meat. And now we actually enter a point in human history where you now need some way to facilitate exchanges. So the earliest way to solve this particular problem was the barter system. So if you guys don't know how the barter system works, well, I'm pretty sure if you guys have ever traded amongst your friends when you were younger with whatever it is that you had, you probably understand the barter system. Two or more parties exchange their goods or services with one another. Now let's get into one of the major problems with the barter system. Now, it's something called the double coincidence of wants. The double coincidence of wants. This is what happens where this is actually the only scenario where the barter system actually works. Now, for you to understand this conceptually, what it means, in order for in order for an exchange to happen during the barter system, you have to have two or more parties, and they must have what the other party needs or wants. If they don't have what the other party's needs or wants, then an exchange cannot happen. And the only way to solve this is for one of the parties or both of the parties to exchange with someone else, a third party, in order to solve the problem. Now, if you guys aren't too sure what I mean here, don't worry, I'll explain that too. So I have a simple example of the double coincidence of wants. Now, what we're going to have is we're going to have a very, very, very basic, very small economy. Now, there's only going to be three things here. There's going to be meat, fruit, and grain. So this is the only three things that exist within this particular economy. So now we have two parties. One party has grain and the other party has meat. Now, the party that has grain needs meat. The party that has meat needs grain. So as you can see here, this is what's meant by the double coincidence of wants. Each one of them has a good that the other one needs, and an exchange can take place. Now here, this one is going to be slightly different. What we're going to do here is we're going to have two parties. The first party is going to have the grain, and the second party, once again, is going to have the meat. The first party is going to have a need for meat, but the second party is going to have a need for fruit. So as you can see here, one of the parties doesn't have what the other one needs. So an exchange cannot take place. So the only way to solve this is to go to a third party and hope that the double coincidence of wants exists. So what we're going to do here is we're going to have the same party that had the grain, and now because they need the meat, they need to exchange for fruit in order to exchange back for the meat. So they have a need for fruit, and then you have someone who has fruit and they have a need for grain. So the double coincidence of wants exists here, so exchange can happen. So once the first party exchanges for the fruit, they can then go back to the original party and then exchange that fruit for the meat. Now, as you guys can see, this is kind of basic, mainly because it's a very controlled case, and there's only three goods in this particular economy. Now, imagine what would happen in a world like us where there's literally hundreds of thousands to even millions of goods and services. If you try to use a barter system in that kind of economy, it would really break down, because as you can see here, this is a two-part process when you have three. So can you imagine how many different parts you would have if you had 1 million? So a solution to this was a universal form of payment. So the universal form of payment is one thing, quote unquote thing, universally accepted, and this is the primitive form of our current monetary system. Now, what happens here is it enables two people to exchange amongst each other without encountering the double coincidence of wants. So a universal form of payment, it solves for the problem with the double coincidence of wants. And the next thing it does is it empowers individuals to more efficiently and effectively exchange goods and services. So you guys probably already know exactly how this works, but bear with me for a second. So the way that this new economy would work is you need some commodity that has high value, quote unquote value. And you're going to use this as the medium of exchange. What you have to do after you pick whatever that is, so in most economies, gold is usually one of the ones that use gold, silver, and copper. These are the three most commonly used things in an economy. But it could even be something like corn. It's so long as people are willing to exchange corn, that would particularly work too. Now, what you have to do after you've figured out whatever the commodity is, what you're going to then do is you're going to have to value all of the goods and services in the economy, compare it to the median of exchange. So what you have to do now is you have to give everything a value. So once everything has a value, then you can actually start the actual exchanges. The next thing is going to be expansion. One of the major issues when you're using this kind of system, the only way to expand is to find more of the commodity or harvest other different commodities that can be used. So typically, like I said before, gold, silver, copper, those are used, and jewels could be used as well. So where does this system break down? And so what I have before is, remember, the double coincidence of wants was one of the main things that broke down the barter system. With this new system, you no longer have to worry about the double coincidence of wants, but it does introduce new problems. And three of the problems are going to be acceptance, behavior, and theft. So, issue number one, acceptance. So, a universal form of payment has to be accepted by everybody in whatever economy that is going to be in. So, everyone has to agree with it. So, if multiple people do not agree with it, you cannot use it. Now, one of the major issues there is different commodities could have different values for different people, and different groups being different groups could value the different commodities differently. Essentially, what I'm trying to say is everyone has to agree on the value of the commodity. Now, assuming that everyone does accept it, then it can be used as the median of exchange, not a second before that. And once it is, then you can actually value all of the goods and service against that commodity. But this actually presents another problem, because now everyone has to agree about the value of all the goods and services against whatever median of exchange. And that presents a problem, because everyone has to agree on the value of everything in the economy. So the next one is going to be behavior. So when it comes to behavior, I'm talking about human behavior, behavioral economics. Like the series, definitely recommend you guys take a look at that. So I have Eben Pagan. He's an entrepreneur, and he said it best. He said human beings are not wired for handling money. Okay, and you guys have to understand at this particular point, the median of exchange, this one presented problems in the sense that people were now empowered in a way that they've never been empowered before. They had more control over their resources than they've ever had previously. So you guys have to understand. With that said, that's going to change. That's going to change people's habits, and what's also going to happen is there's going to be people who are going to be better when it comes to handling resources. So if you guys remember, what you guys remember back in school is some people were probably naturally good at mathematics. And some people were probably better at English or communications or stuff like that. And what's important to realize is when we're talking about stuff like that, sorry about that, guys. But what you guys have to remember when we're talking about stuff like that is it's a skill set. And with more people being better at certain aspects of finance than others, this can actually fuel tensions between two individuals. And it can also fuel tension between two or more groups of individuals. If you guys want to know more about behavioral economics, once again, definitely recommend you guys check it out. And that one should give you a lot of really good information about different aspects that you probably weren't thinking about, like money paradigms and your particular temperament when it comes to money management. Moving on to the third issue. The third issue is going to be theft. So I wish I could tell you who exactly said this. I have no idea who it was, but it was said that the first labor-saving idea was the creation of was not to create something, but just to steal something that someone else created. Now, when it comes to theft, we probably know all too well what it's like. So one of the major issues here is now when people, instead of people stealing food or something like that, they could steal money and then go out and spend whatever newfound medium of exchange resources that they have and then use it elsewhere. And if someone did steal money, there was little to no recourse. So now we're going to move into the history of banks. So this is going to be from vaults to servers. So when it comes to the history of banks, one of the things that you have to understand is with the median of exchange, it's actually not that hard to get people to accept a median of exchange, but the next two issues are going to be they're not going to be as easy as the first one. So the second one, my apologies, is going to be behavior. Remember, most people are bad money managers, but some are better than the others. And the other one is theft. So some people in an economy are going to want to protect their money. So the solution to this is the primitive form of a bank. So typically back in the Bronze Age, what would happen is you would have more or less three different types of individuals. You would have a jewel trader, a moneylender, and a tradesmith. So this is a gold or blacksmith, and gold or blacksmith, and later on it would even be locksmiths and the like. Typically, what would happen is these individuals were considered the most trustworthy, and the way that it will work is these individuals would take in gold from other individuals, and sometimes they would even issue a certificate, and this certificate then could be used for someone else, and as far as the medium of exchange. So this is the earliest form of cash. I don't want to get too far into that, but all you guys really need to know is they would be trusted with individuals to hold their gold. And now that they were in a secure location rather than being held on someone's person, it actually made it a lot easier. So this, in essence, creates the banking function. So if you guys don't fully understand what the function of a bank is, I'm just going to break it down this way. Acceptance and tracking of deposits and withdrawals, debits and credits. So how much money is coming into the bank, how much money is going out of the bank. The second part is going to be securing of a pool of money. So as you can imagine, as more and more people put their money into a bank, essentially what's going to happen is it's going to generate a pool of money. So then what happens, the lender can then lend out the deposits for quote unquote credible borrowing opportunities. So this could be used to keep an economy progressing. Now, for doing this, they collect a premium, i.e., interest for this particular service. Because they had to now lend out money, not because they had to lend out money, but because they were lending out money, now they had to protect the bank. So they came up with parameters for borrowing and lending money. Now this is quote unquote a banker's code. So this is the list of guidelines of a bank will follow when lending out money for any particular purpose. Now the next one is going to be collateral. So collateral is a way of getting recourse for a loan in case that loan cannot be paid. So I actually wanted to talk to you guys about the richest man in Babylon, because there's actually one story in the richest man in Babylon where it's actually from a gold lender. And this particular money lender said two things during the chapter that I actually think are gold, quote unquote gold. And the first one is the best borrowers have items of more value than what they seek. The second one is better a little caution than a great regret. And I think both of those are very powerful. So now, just to put it all together. So the history of credit works this way. The first thing is with the history of humans, we had to start getting to a point where we can actually do trades or exchange. Then we needed money. So the money became the medium of exchange to facilitate the change and the progression of the economy. Then we needed to protect that money. So we created a pool of money that was safe in a bank, and then to progress the economy, then the banker, quote unquote banker, would then loan the money out to credible borrowers in order to progress the economy. Now, in order to do this effectively, the banker would now set parameters or guidelines for lending money. All right, guys, that's all I have for you. So this particular one, you didn't necessarily need it in order to understand debt management, but I think it's really good food for thought, and it's really good for you guys to gain context of why it is that we use credit. And that, in essence, is probably the easiest way for me to explain it, quote unquote, easiest way. I know it took me like, what is this? Yeah, it took me about 30 minutes, but I want to thank you guys for staying with me. If you guys like this video, then hit the thumbs up. If you guys want more videos like this, subscribe. I have an initial goal of getting 1,000 subscribers, so anything that you guys can do to help me get there, deeply appreciated. So put in the comments. I want you guys to tell me what you guys think about the history of credit in the way that I did it. What did I do well? What did I do poorly? And that's all I really have for you guys. I want to thank you, and I'm going to see you in the next video.